Hey guys, I don't know if you've noticed lately, but after each inflation report comes out, the market usually rebounds. I think people are taking that as an opportunity to buy any dip and get in, okay? There's a lot of cash on the sidelines, remember, and so don't let fear blind you with inflation reports. These are gonna keep coming out. It's gonna keep being under focus, okay? And markets may be volatile, but at some point you gotta get in. And remember, the big cap, the mid caps, even small caps, the ones that are generating positive free cash flow that's growing are going to get rewarded in this environment and long term, guys. Remember, winners keep on winning. So I know a lot of people are trying to catch lightning in a bottle, right, and become a millionaire, right? All these people out there that want to buy a stock that goes up 200%, right? And they have these pipe dreams thinking it's going to keep going up, right? That's not usually how the market works. And you can catch those once in a while, though, but you have to be smart and know the real money. If you want to be safe and grow your money and get to wealth, you got to be in these smart stocks, right? These big cap, these mid caps that have strong balance sheets, that are buying back their own shares because they have strong free cash flows in there coming in, right? That they don't need to tap the, markets for money at these higher interest rates or dilute shareholders, right? So never lose sight of that, guys. Although I do believe the small cap AI stocks, like we've been talking about, are going to have their day in the sun where they're going to rally hard. You want to make sure you take your initial investment out when it does rip hard, because a lot of these probably won't make it. Remember, out of the small companies out there, 9 out of 10 end up failing at some point. Those are the stats, okay? So, but all you need is one, like we said, to 10x or more, and that can make your account. So it's good to have those, don't get me wrong, but you want to make sure that you're playing with house money if you get to that level. And I'd rather see you put that in a safe place like Annaly stock, NLY, right? Having that 13 to 14% dividend go right to your bank account as passive income for life. Remember, you leave it in there, doesn't matter what the stock price does, and you keep collecting that income every quarter. Again, you pay taxes on that, but it's worth it in the long haul. Or you put it into those big cap names, right? The ones that are gonna keep getting bigger and bigger, right? The mega caps, we know Amazon, Google, Microsoft, okay, Nvidia. They're gonna lead this boom, guys. And a lot of people are gonna say, oh my God, they've gone up too much, There's gonna be dips along the way, of course, but for the next decade, guys, they're gonna keep leading the way. And remember, they have the money to invest billions and billions of dollars to stay ahead of the competition. Remember, the bigger get bigger, the small caps will struggle over time. And that's why, like I said, when you get that interest rate cut, when those small caps do benefit from rates going down finally, like Upstart, like these ones we talked about, make sure you play with house money, you take your profits, you let the rest ride, and you can let that go into the sunset and see if it becomes a 10x, 100x one day. But make sure you have more of your portfolio in the big cap, the mid cap, the companies that have strong free cash flows. I would put, maybe less than 10% or 10% of your portfolio should be small cap stocks, in my opinion, okay? Because they're riskier, obviously, okay? And so the rest can be, dividend. Like I said, I'd have a big chunk in dividend stocks, safe ones that can be reinvested, but not Annaly. Like I said, Annaly, I like to have that as passive income, go right to the bank account. But other ones like DLR stock, which I just recommended earlier today, which is Digital Realty Company. This is a data center REIT, which is a real estate investment trust that gives you a 5% dividend that you can reinvest back into it, because data centers, we know with all the power being consumed, right, that with the data centers being built everywhere, that they're going to be in high demand, okay? With internet, we're addicted to our phones in America, right? And worldwide, data centers are being created, okay? So that's why that's a good one you can keep reinvesting. And then, like I said, just have it in the Googles, right? The Microsofts, right? It's okay. Google's still not totally over expensive, and I don't think Nvidia is either. Amazon is getting up there again, close to all-time highs. I don't like buying stuff, obviously all-time highs, right? So wait for a dip, okay? There'll be opportunities along the way. But like I said, at some point, you got to get in, right? For the long haul. If you've been on the sidelines trying to, worried about these inflation reports, as long as inflation is coming in line, if it's slightly hotter even, guys, it's not the end of the world. We're not talking about 9% inflation. Again, if you see a report come in much hotter than expected, then, right, you take advantage of that dip, okay? And you can dollar cost average then. So regardless, I don't know if you've noticed, but people are buying this dip after inflation reports come out. So remember, PPI tomorrow, followed by CPI Wednesday. Let's see if the same thing happens after CPI Wednesday. I'm curious if it drops and then bounces and recovers again, But let's watch together, guys. Drop me a line in the comments. Let me know what you're doing, what stocks you are playing. Have a good day.